Welcome back, everyone. This week, we are continuing our coverage of insurance claims after Hurricane Isaac. So many of you out there are going through the process and really running into some challenges. We know that you have lots of questions, and today our guest is someone who definitely has the answers.
That's right. We are honored to have with us today Insurance Commissioner Jim Donelon, and he is going to answer some questions. So let's plunge right in. Insurance Commissioner, why don't you tell us a little bit about what your job is and the job description?
I am a constitutionally created, statewide elected official charged with regulating the insurance industry. I'm one of 12 elected insurance commissioners in the 50 states. The rest are generally appointed by governors as members of their cabinet. But our first and primary responsibility is to protect consumers when they are dealing with this very expensive, very complex, and very vital aspect of their lives. Nothing happens in their homes or at their workplace without insurance.
Right, and there are a lot of people out there who are having to deal with a lot of challenges in the wake of Hurricane Isaac. I know that you've gotten lots of calls. What have been some of the biggest challenges that you've seen come your way?
Well, I've been saying ever since Isaac that for this event, it's going to, for New Orleans, this event is going to be what Gustav was for the Baton Rouge area 4 years ago. A sticker shock event relative to named storm deductibles. Back in the Katrina days, 7 years ago, my policy had a 2% named storm deductible on it. Most did not. Nowadays, in coastal parishes all over Louisiana, and for that matter, up and down the Atlantic and all around the Gulf Coast, almost all policies have a 2, 3, or 5% named storm deductible.
And I just want to stop you there. I just want to stop you there so that people understand this named storm deductible. When the storm actually is named, it gains an official name, then that deductible kicks in.
Well, it can vary and does with 3 different types of named storm deductible policies. And it depends on your company. One is a hurricane deductible, so it has to be a hurricane that does the damage. Another is a named storm. That can be a tropical storm or beyond. Another is a wind and hail deductible. Same thing generally in all 3 cases. With Isaac, it became a hurricane, so it trumped all 3 of them. The important thing to remember beyond the fact that there's a 2, 3, or 5% deductible applicable is it's not 2, 3, or 5% of your claim. It's 2, 3, or 5% of your insured value. Typically, a homeowner's insured value is $150,000 to $200,000. If it's $200,000, that's a 3% named storm deductible, which is the norm. That's a $6,000 deductible applied to any damage that occurs as a result of a named storm. With Gustav, it caused thousands of homes in the Baton Rouge area to have blue roofs on them for over a year after the hurricane.
On that note, with this, let's call it a named storm deductible, referring to anything related to tropical storms and hurricanes, that came into, let's say, wide usage after Hurricane Katrina, correct?
Absolutely.
And that's something that was not possible or did not happen because until your office gave it some sort of approval. Why don't you explain that process?
We approve for every form of insurance: long-term care, auto, life insurance, health insurance, homeowners, commercial property, any policy form that a company proposes to use, an admitted company doing business in our state, has to submit their forms when they first go to market them to us for approval. And so, yes, we had to approve them. But we have to approve them subject to Louisiana law. And any limitations that the Louisiana legislature puts on insurance in one form or another. And we're very fortunate. We're the only state in the union that has what I consider to be the most important consumer protection, homeowners consumer protection statute found anywhere in the 50 states. If you and your company have been doing business together, you've had your homeowners with them for 3 or more years and have not had 2 or more non-active God claims, kitchen fires, dog bites, within a 3-year period of time, they and you are married, I call it. They can't change your deductible, change your premium individually, do anything to you individually, or non-renew you. that they don't do to their whole book of business statewide. As a result of that law, when Allstate, after Katrina, wanted to reduce their coastal exposure, they applied a 5% named storm deductible on their entire statewide book of homeowners business. So it is the same in Shreveport as it is in Grand Isle because of that 3-year protection statute.
But that deductible, when it came across your desk or through your office, you might have anticipated it was going to be highly unpopular. In this state, how many people had only some roof damage and they're not going to get anything, and it's causing a lot of grief. Is there anything that you could do then or you could do now to say, well, wait a minute, this is working out to be a pretty bad deal for people? Can you say you need to go get legislative approval? What can you do then? What could you do now?
As I tell folks all the time, there's no free lunch. We can mandate that they not do named storm deductibles. Act of the legislature would do that. And they would then say, as anywhere in America they have the right to, well, then we're going to increase our premiums by 20%. Or we're just going to leave the state. We're not going to do business in your state, as they have done in Florida across the board, left the state. Not for that reason, but for the inability to compete with the state-sponsored market of last resort Florida citizens, which lowered their premiums by act of in a special session right after a governor got elected by promising to lower rates, called a special session, passed a bill to lower rates 25%, and they did, and that made citizens cheaper than the private sector, and it is now, the state is now the largest insurer in the 3rd largest insurance market in the United States.
The insurer of last resort.
Except that it's now the insurer of only resort.
Yeah. Right,
Can we do that? I like 25% cheaper.
That's the 2 choices, John. You're right on it.
25% cheaper sounds good to me.
It's either state insurance or private sector competing with each other. I told y'all the story about my change since Katrina before we went on the air, and how much money I saved, $600 a month, by moving from a major national insurer to one of the new smaller regional insurers. And we've done a plethora of legislation since Katrina, including 1 named storm deductible per season. We did that after Gustav, and then I came heading our way 3 weeks later, and people were saying, am I going to have a second named storm deductible?
So it can only happen once
per season.
Once per season.
We copied that from Florida, who did it after 2004, before they did the stuff with citizens. They said, because they had 4 storms. Orlando had 3 hurricanes go across Orlando in 1 hurricane season.
Wow.
And so they limited it to 1 per hurricane season. Equally important, because now we're so dependent on these smaller, as my wife said when I changed to the company I'm with now, Jim, I never heard of them. Are they okay? I said, Mops, that's her nickname. Trust me, that's what I do every day. I'm not going to buy a policy from a company I'm about to put out of business. But even for those who aren't married to the insurance commissioner, they can rest easy as long as their home is insured for less than now $500,000. Because the Guarantee Fund, state-sponsored market safety net under all companies doing business in the state, we tripled their limits from $150,000 in 2 visits to the legislature to now $500,000. So all these new companies that people have never heard of, unlike Allstate, State Farm, etc., they can sleep sound at night up to $500,000 per claim.
Wow, lots of really, really great information. And we're going to get you to stick around because we have to take a break right now. We want to get your questions in on this conversation. So after the break, when we come back, we're going to be answering your questions, John and Commissioner Donelon. So stay with us.